Hello friends, in this lecture I am going to discuss about interest on partners' capital. Although we have discussed in detail about this, but still there are few points that need attention. It says it is allowed to compensate a partner for contributing capital. That I have already discussed in detail, that a partner is losing interest on the money from the bank, so the firm is liable to pay him interest to compensate for the amount that he is contributing as capital. Second says it is computed at an agreed rate with reference to the time the capital has been used. That is, the interest is to be paid for the period the capital remains in the business. That means if he is introducing the capital on 1st of April, then interest on capital is to be paid for the whole year. But if he is introducing capital in the middle of the year, say on 1st of October, then the interest will be paid only for 6 months. Clear? Now next point says it is computed on the opening balance. What it means? That is, the interest is to be calculated on the opening balance of capital. Interest to be calculated on opening balance in capital account. Now see what we do. Normally what we have is we have opening capital. We have done it in the partner's capital account. We have opening capital. What we add in this opening capital? The profits. Okay. What else? Interest on capital. What else? Salary, commission. I'll say remuneration. Clear? Because all these are income for the partners. So we have the partners opening capital, we add profits, we add interest on capital, we add remuneration, and we deduct drawings, and we deduct interest on drawings. What else? The profits are added and the losses are subtracted. Now what we have here is the closing capital. That is the capital at the end of the year. Now it says that the interest on capital is to be calculated on this opening capital. But if this opening capital is missing, but we are given the closing capital in the question, then how we are going to calculate opening capital? Closing capital, add back the items that have been subtracted. That is, add back drawings, add back interest on drawings, and add losses, and subtract from the closing capital what have been added. Profits will be subtracted, interest on capital will be subtracted, and remuneration will be subtracted, and we will reach at opening capital. Let's see here. Interest is calculated on the opening balance in the capital account. If opening capital is not given, it is ascertained by adding the items which have been subtracted and subtracting those items which have been added during the year. See, the capital at the end we are given. We'll add back what has been subtracted, that is the loss, drawings, interest on drawings, right? And we will subtract what has been earlier added, share of profit, additional capital if any, interest on capital, remuneration. Clear? We will subtract all this and we will reach at opening capital. Okay. So you can write this down, the method of reaching at opening capital. Capital at the end, add back the items which have been subtracted during the year and subtract those items which have been added during the year. So we'll reach at the opening capital. Clear? Okay. So it says computed on opening balance. Then it says additional capital introduced during the year. Interest allowed for the period it has remained in the business. What it says, on 1/4/16, X partner has a balance in the capital account of 1 lakh. Okay, interest at the rate of 10%. Now he is having a capital of 1 lakh on 1/4/16. We will pay interest on 1 lakh for the whole year. Okay, on 1/10/16, X brings additional capital of 50,000. Now tell me, we will pay interest on this 50,000 for the full year or for half year? We can't pay him for the full year because he is bringing the money in October. How can we pay him interest from April to September? That is a loss for the firm. Logically, he is bringing the money in October and the money is being used by the business from October to March. So we'll pay him interest only for those months because the firm is using money from October to March. Right? So here it will be for the full year, and here interest will be paid for 6 months. 6 months from 1/10/16 to 31st of March 17. This will be the interest paid. Clear? Let's see the next point. Okay, it says additional capital introduced during the year, interest allowed for the period it has remained in the business. Let's see the next. Partnership agreement does not have a clause as to interest on capital. What will happen? I've already explained this in detail, that if the partnership deed is silent as to interest on capital, then the provisions of Indian Partnership Act 1932 will apply, which says that interest on capital is not to be allowed. Clear? Let's move on. Further, we have the partnership agreement provides for interest on capital. It is given in the partnership deed that interest on capital is to be paid. Clear? But it is silent as to treatment as a charge or appropriation. The partnership deed is silent that whether the interest on capital is a charge, is to be treated as a charge, or it is to be treated as an appropriation. Now, if it is silent, then interest is allowed only if there is a profit. Because it is an appropriation, it is considered to be an appropriation, therefore the interest will be allowed only if there is a profit. If there is a loss, no interest will be allowed. Clear? Second point, interest allowed at agreed rate if the profits before interest is equal or more than interest. What it says, suppose we are preparing profit and loss appropriation account. Okay. So it is given that I have a profit of say 50,000. Interest on capital, I say there are two partners X and Y. For X it is 10,000 and for Y it is 10,000. Clear? So 20,000, and the remaining profits we will distribute among the partners. Clear? Now take a second case. We are preparing a profit and loss appropriation account. We have a profit of say 15,000 and interest on capital X 10,000 and Y 10,000. Now the profit is less than the appropriation. Remember, we have done one topic similar to this. When the profit is less than the appropriation, interest on capital to be paid is 20,000, but the profit we have only 15,000. Now what will we do? We will divide this 15,000 in the ratio of interest on capital to be paid in the ratio of 1:1. So the interest on capital will be X 7,500 and Y 7,500. 15,000. Clear? If the profit is less than the interest on capital, then that profit will be divided in the ratio of interest on capital. Let's see the notes. It says interest allowed at agreed rate if the profit before interest is equal or more than interest. Clear? That is the first case. Second case is interest allowed only to the extent of profit in the ratio of interest on capital. That is, if the profits before interest is less than interest. Profit before interest is 15,000, sorry, and the interest to be allowed is 20,000. Okay, now the interest allowed is to the extent of profit 15,000 in the ratio of interest on capital. Here the interest on capital ratio is 1:1. So we are dividing the profit in the ratio of interest on capital, that is 1:1. Clear? Now, if the partnership agreement provides for interest as charge, if the partnership deed clearly states that that interest on capital is to be treated as a charge and not as an appropriation. Clear? Now, if an item is a charge, then what? If it is clearly stated that interest on capital is to be treated as a charge, then interest is to be allowed whether there is a profit or there is a loss. Interest is to be allowed from profit and loss account, because in this case it is not a appropriation, it is a charge. It has to be provided whether the firm is earning the profits or not. If it is clearly stated in the partnership agreement, only then. Otherwise, it is an appropriation. Clearly? So, these were the few points regarding the interest on capital. That it is allowed to compensate partner at an agreed rate for the time period the capital has been used, to be calculated on opening balance. Be careful with the opening balance, how to calculate the opening balance. Clear? Opening capital, how to calculate, will go reverse with the closing capital. Clear? Then we had the partnership agreement does not have a clause as to interest on capital. The provisions of Indian Partnership Act 1932 will apply, which clearly states that interest on capital is not to be allowed. Then partnership agreement provides for interest on capital but silent as to the treatment as a charge or appropriation. Interest allowed only if there is profit, right? Interest, if the profit is more than interest, at an agreed rate. If profit is less than the amount of interest, then that profit will be divided in the ratio of interest on capital. Clear? That was interest on capital. One more small topic we are going to discuss, that is remuneration. One small topic I am going to discuss is remuneration to partners. Although I have already discussed it, that if the partnership agreement provides for, then the remuneration, which may be called as salary, commission, etc., is to be paid to the partners. But if the partnership deed is silent as to the remuneration, the provisions of Partnership Act 1932 will apply, which says that no remuneration is to be paid to the partners. Just one point I want to discuss here is commission. Commission will be given the rate of commission. Okay, say 10%. Now in the question, it can be given in two ways. Number one is, it can say that commission to be calculated on net profits before charging such commission. Before charging such commission. Right? So if we say, if I have a net profits of 50,000, what will be the commission? Commission will be 50,000 into 10% straight away. That is 5,000. Clear? This is the first case. Commission is to be calculated on net profit before charging such commission. Now, second case. In the second case, it will be said that commission is to be paid on net profit after charging such commission. After charging such commission. Now, how we will calculate the commission? The formula is net profit into rate divided by 100 plus rate. Clear? So the net profit here is 50,000 and the rate here is 10, 100 plus 10. It comes to 50,000 into 10 divided by 110. Clear? So this is the formula for calculating. Now this amount will be 50,000 divided by 11. This will come to approximately 45. Clear? Now I will show you this formula, the mathematical calculation of this formula. Let's see. What the question says, that commission is to be paid on net profit after charging such commission, and we have to calculate the amount of commission. I'll say let commission be X. Now what will be the commission? It says commission amount is equal to, what is the profit? 50,000 minus commission, because the commission is to be paid on profits after commission, into 10 divided by 100. Clearly, I'll take this here. It's a very simple mathematical calculation. I'll say 100x divided by 10 is equal to 50,000 minus x. I'll take this x on this side. I'll say 100x by 10 plus x is equal to 50,000. Now this will be 100x plus 10x divided by 10 is equal to 50,000. Next, 110x divided by 10 is equal to 50,000. Now x is commission, x is equal to 50,000 into 10 divided by 110. We reach at the same place here. See, I have mathematically proved this formula. Clear? I have taken the commission as x. Now what is the amount of commission? Profits after commission. On that profits we have to calculate the commission. Clear? So these are the two cases regarding the payment of commission to partners. Remuneration to partners. Salary is simple. The partnership deed provides for the payment. We have to pay that. If the partnership deed is silent as to the remuneration, the provisions of Indian Partnership Act 1932 will apply, which says that no remuneration is to be paid. Clear? And one last thing is interest on partner's loan. Interest on partner's loan. This we have already discussed in detail, that if the partnership deed provides for the interest on partner's loan, then it is to be paid at the agreed rate in the partnership deed. Otherwise, the provisions of Indian Partnership Act 1932 will apply, which says interest on partner's loan is to be paid at the rate of 6%. Second thing, it is a charge against profit and not appropriation. It is a charge against profit. That means the partner's interest on partner's loan has to be paid whether there are profits or the losses, and we will deduct this from profit and loss account and not profit and loss appropriation account, because it is a charge against profit. Clear? Very simple. So we have discussed few points in this lecture. We have discussed about interest on capital. In that we have discussed about opening capital, right? And we have discussed about additional capital. Interest is to be paid on additional capital. Then we have discussed about the proportionate interest to be paid in case the profit is less than the amount of interest to be paid. Clear? Then we have discussed about remuneration to partners. In that case, two cases of commission I have discussed. One is commission to be paid on net profits before charging commission. Second is commission to be paid on net profits after charging such commission. Right? I've told you the formula for this after charging such commission. It is net profit into rate divided by 100 plus rate. And I have shown you the mathematical calculation of this formula. Clear? Then the interest on partner's loan. This we have already discussed in detail earlier also, that it is a charge against profit. It has to be paid whether there are profits or the losses. Clear? So now in the next lecture we will be doing some practical problems based on these topics only. Okay.